Welcome back. Hope you're having a good morning. Well, the last couple of days, the cues that have been a little bit soft. So you have Brent that's under pressure. The US dollar index as well has moved up to around 105 odd. It's cooled off a little bit from the top. And you have bond yields as well that are trading at the highest levels you've seen in more than 15 years. So in that sort of a backdrop, well, the GIFT Nifty is suggesting we pull back close to around 100 points. But let's talk about stocks. And to help us out with some fundamental analysis, Deven Choksey, Director at KRChoksey Finserv, joins us on the show. Hi, Deven. Good morning. Well, the stock of the morning has to be HDFC Bank, right? The street was pricing in that NIMs are going to be a little bit under pressure. And maybe, in fact, some of those return ratios as well will get diluted. But it appears the read-through is that the NIMs will be a little softer than earlier expected. And the book value, the net worth as well, is a little bit lower than what the forecast were by the end of this year. What's your view on the stock? It should pull back a little bit, but will you be a buyer?
Hi, Nigel. Good morning. Well, definitely, I think some of these concerns, are near-term concerns, and I think they may be probably having some amount of overhang on the stock price. But it doesn't matter much, according to me, largely because of few facts. On one side, I think you have a very strong liability management, I think, as far as your books are concerned in HDFC Bank. On the other side, you have corporate loan book, which is growing, retail loan book, which is growing, housing finance, which is growing, and at the same time, priority sector. So each of these areas are probably having a balanced growth in the books of the company, in the merged company. So from that perspective, I think one is very sure that I think next 3-4 years time from now on, we are going to see the sustainable growth in the business as far as the loan book is concerned, and that too, I think, in a balanced portfolio manner. So that is where I remain largely more confident. There may be some small pressure, but I think that would get mitigated with the size of the book, which is expanding. And that's where I believe that I think that things are likely to remain more positive than otherwise. I'm looking at the possibility of the company turning into 50 lakh crore AUM size, I think in 4 years or so. If that does happen, then probably I think this is where we have got maximum amount of opportunity to make money from. Near-term concerns, I think, would probably find its way out in a due course of time. But I think this kind of larger picture, which one has in front of the possibilities and the potential of the company to perform, I would think that would be, I think, a much better picture for investors to carry the stock in the portfolio.
Okay, so you're not too worried about the near-term impact that HDFC Bank will see because of the merger. It is the bigger picture that you're looking at, and you're quite bullish on the stock. Got that. Deven, the other stock I wanted to discuss with you was Bajaj Auto. It's hit a fresh record high on Monday. And we had a very interesting chat with the management where they said that the mid-market segment is seeing a very strong growth. They have, they've planned 6 new upgrades to the Pulsar, and they're going big in that category. Now, at this price, is the risk reward still favorable for an investor?
Good morning, Sonia. Well, I think in the recent past, maybe I think 9-12 months back, I think the stock was under discounted valuation because of the variety of concerns, including, I think, the issues with the exports of the products because of the problems with other African countries and so forth. Having got that particular situation come under control, now the next big thing that one would definitely look at is how exactly companies positioning into the value product segment. And that's where I think your larger amount of growth potential lies in this company. On a relatively smaller number of bikes, I think they would be selling. They would be producing higher amount of revenue and certainly I think better amount of margin, given the kind of power segment on which they are focusing. The larger power Pulsar, I think, which is coming up, and which is also along with the Triumph and Husqvarna portfolio of products. I think they are suggesting that the company would have relatively better margin products to talk about, and I think so the turnover, but on a lower number of bikes that they would be selling. So that is where I see, I think the market is relatively more convinced. Yes, the stock price has moved up very smartly in last 6-9 months. But I believe that I think the underlying potential of the company remains extraordinarily strong. Maybe the export-related concerns which were there earlier back, I think, and that is where the stock was not performing. That is gradually receding away, and that is where we are seeing the prospect of company returning back to the higher numbers. So we remain convinced. I think there may be some situation of higher valuation. But this is the nature of the market. I think when higher allocation of fund takes place into a counter, maybe I think some amount of valuations are stretched. But I still see, I think, a good long-term prospect in that.
All right. Deven, on a side note, you've given us the view on the stock fundamentally. But, guys, yesterday I test tried the Triumph. Beautiful bike. Nice bike, good firing.
How's the power?
It looks good as well. I'm currently riding a 650 Interceptor.
Yeah.
So I don't think directly competitive. But good bike, nice bike. I'm not buying it, but I'm lucky that my Fufa has bought it. So I've got a couple of those Triumphs in the building. But I was quite impressed, with the entire configuration. And it looked good as well. And you can open up the engine a little bit. So
we're going to see him zoom into the office one day, perhaps on the Triumph,
that's the best
right?
kind of access, right? You have the bike, but you don't have to buy.
You don't have to pay for it.
in fact, I have a couple of uncles who went to buy the bike. They went with my wife, and they were trying to convince her to buy it for my birthday. I'm okay if they have the bike, so I can use it from them instead of it going from my pockets.
It's like kids, right? I mean, they say, well, kids who say, "Will we want a pet?" And the best answer is, well, a neighbor.
Neighbor has it.
Yeah.
Anyway, let's, I just want to, Deven, hi, morning, Prashant here. I just want to come back to banks, but not, we discussed HDFC Bank. PSU Banks, what's your view there, Deven? In the last 45 minutes of trade, PSU Bank Index sold off 1.5%. Volumes were, I think, pretty much close to record highs there. What's the best sense?
Yeah, Prashant, good morning. Well, I think as my understanding on the subject is, the larger the bank, better would be the opportunity and the prospects that investor would have to make money from in coming period, largely because of the fact that I think your ability to lend is much stronger and much larger. And that's where I think the likes of SBI, likes of BOB would remain top of the pack as far as the PSBs are concerned. Rest of the mid-sized, small-sized banks, I think they would have the opportunity because also SME segment, I think, are also requiring funds, and that is where they are positioned well. But in my viewpoint, I think given the kind of strength that the larger PSBs like SBI and Bank of Baroda have in the area of even including competing with the corporate sector banks in the private sector, I think they would have relatively better ability to produce performance. Today, I think the market is allocating more amount of money towards the banking space, and that is where I think the PSBs are being found attractive, largely also because of the fact that I think they have been remaining, I think, at the lower side of the valuation up till now. So to a certain extent, I think it is justified that I think the funds are chasing some of the lower valued stock, and that is where these companies are. But if you want to see the sustainable performance in the portfolio, my take would be to stay with the stronger and the larger banks, because as I see it, I think the big is getting bigger. And this is absolutely applicable to the banking sector per se in next 5 to 10 years. So stay invested with this particular space, I think, with the larger bank.
All right. Deven, thanks a lot for that. So that is on a couple of these PSU banks. But